Robinhood, one of retail investors' favorite stocks. Um, will it continue to go flying high, or is it time for Robinhood to be sold and forget about for the rest of the time? Well, in this video, we're going to check out what Robinhood, the company is. We're going to look at the business model. We're going to look at two positives and two negatives to the growth of revenues for this company. Then and we'll see what they can do to improve revenue over time, what they should be looking at doing going in the future to make you more moolah as the investor. Then we'll do a deep dive into the stock, see stock analysis, see what's actually happening with return on invested capital, revenue, shares outstanding, and the likes to see if this company is worth looking to invest into. And if you stick it right to the end of the video, I will give you the intrinsic value of Robinhood right here, right now, and what Robinhood would be into the future. So let's ride 'em, cowboy. Yes, all the way to see if Robinhood stacks up as a company that you should be investing into, or is it time to throw it away? Right here, right now, at Barry Charles. Welcome back, guys and gals, to the channel. I hope you're having a great day out there. Yes, let's get rocking and rolling with the stock. Robinhood, can this be the stock for you, or is it time to forget about it? Well, let's have a look at Robinhood, what it is, what it's all about. So let's start off firstly what the business is and what its business model is and how it tries to make money for you. So Robinhood is a financial service company which revolutionized retail investing by offering commission-free trades through its mobile app. Founded in 2013, so around 12 years ago, the platform allows users to trade stocks, ETFs, options, and crypto with ease. Robinhood's business model primarily generates revenue through payments from order flow, receiving compensation for market matters for your trading. So basically, you don't necessarily get the lowest trading amount with Robinhood on the market. You will get a slightly higher rate so they can take some money out to make their own moolah. Not good for you as the investor in the long term because you're paying higher prices for your thing. It's not good. So just something to think about if you're a Robinhood app user, that you could be getting better deals at other companies, but sometimes you have to pay for the commission. So how else are they making money outside of that? So other revenue streams they have right at the moment is their premium service, and their premium services, interest on customers' cash balances, and security lending. So by lowering the barrier to entry, Robinhood has attracted millions of young and first-time investors. So now that we understand a little bit more about the business model and how they make money, let's have a look at two positives for growth for the stock. Well, first of all, number one is expanding the user base and engagement. So Robinhood has a strong brand with the younger investors in the retail investor market, which is growing with recurring investments and retirement accounts. The company is improving retention in it and increasing assets under management, and could lead to more trading activity boosting going forward. Now, number two positive for this company in terms of the growth is the diversification into crypto and Robinhood expansion of more cryptos to trade has become more popular with the stock and people buying in, with also higher yield savings accounts as part of trying to attract people to come on board. Robinhood also has crypto wallets, which just allows the traders to hold their cash more securely than other places and easier to trade. So that is the positive sides of Robinhood. Let's look at some potential negatives in terms of growth for this company. So number one, regulatory and legal challenges. So Robinhood faces scrutiny from regulators, particularly regarding its PFOF model, which accounts for a significant portion of revenue. if the sector or other agencies impose stricter rules, it could force the company to rethink its revenue structure, impacting profitability. So basically, their order flow, if they say that they shouldn't be allowed to make money that way, they will lose their business that way and have to change their whole business model, which could lead to bankruptcy. Number two, negative revenue volatility and dependence on retail trading. So when they're in bad markets, Robinhood has less people on trading sites, and it can lead to people leaving the stocks forever and their revenue to drop. There's obviously crypto with the big trading is how they make their money. Less trading activity leads to loss in revenues and costs, and they need to look at diversifying their roles if they want to continue to grow as a company. With lower trading volumes, hurts earnings. So now we've looked at positives and negatives. What can Robinhood actually do right here, right now to grow their revenue? Well, one thing, enhance their subscription service, expanding Robinhood Gold, which advance analytics, premium research, and better margin rates. Can attract serious investors. Institutional partnerships, partnering up with financial institutions to offer advisory roles or wealth management service could bring in new revenue streams. Number three, international expansion. Robinhood has started expanding overseas and entering high growth markets, could significantly increase its user base. So if it can get to all places around the world, the more people that can invest and can boost themselves up. Number four, increase crypto offerings. Continue to improve on the crypto side where it is popular with the retail investor, and you can see profits grow that way. Robinhood has a niche market that they can provide, but can they get institutional investors? If they started getting institutional investors that want the best bang for their buck, then sky's the limits for this company. Absolutely, that's what they need to do. So now that we've had a little bit of a look of what's happening around the world, let's have a look at what Robinhood's stock analysis, what's the financials actually saying about Robinhood right now. Are they a good company? So their revenue good? Is their net profit good? Return on invested capital and so forth. Let's do it right here, right now with Barry Charles. If you like what you're hearing, remember to like and subscribe. Be much appreciated. Let's look at it right here. Well, Robinhood is about $42 at time of recording. 52-week range of $14 to $67. So congratulations to you if you're at 14. 67, you might be thinking to yourself, did I pay too much? So if we just look at what the price was at $42, it's up 113% on last year. And in the year to date, it's up around 11%. So interesting mark there. Earnings per share, 1.4 with a P ratio of 29. Is it growing? Is it growing enough to be a multi-bagger? At the moment, no. Short interest of 2.9, so people think it's going to stay here for the long term. We will see about that. Market cap, $36 billion. Not to be sneezed at. Let's have a look at the revenue here. So the annual revenue has increased year after year, 2.9 billion, 1.8 billion, and 1.35 billion. Nice. But in terms of annually, net income has been all over the show. But so it has been improving. Don't get me wrong. It just went to profitability. But look at this: negative 1 billion to 541 negative to now positive 1.4 billion. That's pretty impressive. If we look at over the shorter term, over the last quarters, we see 1.04 billion to 632 million in terms of the revenue, so that's been going up there, and net profit is flowing up 916 million from 180 million the quarter before. So it really has skyrocketed. Can they continue that skyrocketing? That is concerned, or was it just a one-off bang bang thank you ma'am sort of situation there? We will see. So a little bit of, so we will see if this continues, if they can continue to just push up, rank up. Could continue. Return on invested capital 6.4%, very good. Well, not super good, but pretty good. Robinhood's free cash flow negative 207 million. Negative $207 million. That is the concern. That's where the question marks are with this company going forward. So it's down 117% on the year before. So a bit of work to be done there in terms of free cash flow for this company. Yeah, so why was there this big drop in cash? They're looking to expand globally, operation expenses, stock holders compensation. So there's a bit of work to be done for Robinhood. Robinhood shares outstandings have continued to increase. So that's not good, but I expect that's going to change soon. So there's possibility for improvement there for Robinhood. Total assets up to 26 billion from 17 billion, so very good. But also total liabilities up from 11 billion to 18 billion. So there's a bit of liabilities coming forward for them. Well, yes, now we're here for intrinsic value of this company. What is the intrinsic value? What we're going to look at a bear case. We're going to look at base case, optimal case, extraordinary case, and out of this world case. What is the stock actually doing? So this is just basic Graham's calculation. Look at the current share price, earnings per share, the expected growth rate, and the current bond yield to give you intrinsic value. So let's have a look at the bear case here at $42 current share price, earnings per share where it is currently 1.4 and a growth rate of 10%. At the bond yield at about $4 at the moment, or 4% at the moment. You're looking at a fair valued stock at the moment of $43. Now if we go to the base case with the same figures with earnings per share of $2 and a growth rate of 13%, then you're looking at $76 stock. Now, if you think it's going to double its earnings per share, in the optimal case at 2.8 at 15% growth rate, then you're looking at $118 stock. If you think it's going to go to 3.5 earnings per share with an expected growth rate of 20%, then you're looking at $186. And if it's going to fly to more than 3x to 5 earnings per share at 25% growth rate, then the stock's a $321 stock. So do I see this company getting to 25% growth rate to the end of time? Highly doubtful. Don't see it happening. But there was a big move there in the last year, so in the last quarter, so we will see if this continues. I'd say that I can see the earnings per share getting to 5, but I would say at a 12% year rate. So you're looking at a stock that's probably going to 180. So potentially it's a good buy. Do I think it's going to be a game changer for you? No, but it's going to be a solid one for you. So if you like solid stocks, like an ETF sort of stock, this is the stock for you. I don't see it being an absolute fly to the moon. You'll retire on the stock, but it will make you money, I think, more than likely long term. But yeah, there's potential for growth, but there's a lot of work to be done to see Robinhood going to number 1. But anyway, that is Barry Charles for this episode. I hope you enjoyed the video. Remember to like and subscribe, and I'll be back with another video for you very, very soon.